What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you what stocks are at the top of my watch list going into the week ahead, as well as how I feel about the market conditions. So without any further ado, let's jump right in. Okay, so when we look at the NASDAQ going into the week ahead, the NASDAQ is bullish overall long term, but probably bearish over the last sort of 2 to 3 months here, and at least choppy over the last few weeks. However, last week was a very strong week. We had 4 green days. We are pushing up higher and we're within maybe 10% of our all-time highs here. So we're not seeing a significant pullback on the NASDAQ, but we are seeing a little bit of a pullback and a little bit of choppy trading over the last few weeks. Now, when it comes to the S&P 500, we are within a couple percent of our all-time highs, especially with the nice recovery last week. So things are looking pretty decent from the S&P 500 and the Dow Jones as well. We are within another kind of 4 or 5% here on the Dow Jones. Things look fairly decent. We have had a couple of pullbacks in what you would call pretty choppy trading over the last 2 months here. However, we are on sort of the top half of that choppy trading, so it's not all that bad. Now, when it comes to Bitcoin, it does look like we're starting to see a little bit of a trend change right here. As you can see, we have crossed through this blue line that I have drawn. This is my trend line that I'm saying we are breaking through right now. We have also seen a crossover from the MACD, but we are seeing lower volume, which is not a great sign here. And so we've got some conflicting messages and some conflicting signals here when it comes to Bitcoin, but it is nice to see this bullish sign here where we are breaking through resistance. It looks like this could be the start of a trend change, or at least a little bit of consolidation. We'll have to see how the next few days go. But what my concern is, and what I'm really focusing on right now, is the Omicron numbers and COVID, because in the United States of America, we are very, very close to the all-time highs back at the beginning of 2021 here. We were within probably 5 to 10% of that with regards to daily new cases. And when it comes to Canada, we are skyrocketing out of control right now, blowing out our previous highs out of the water and pretty much doubling them just in the last 2 weeks. So it is not looking good here in Canada. Omicron numbers are absolutely skyrocketing and we are almost at double our worst case scenario from the last basically year. So not looking good there. And when it comes to France, we are also seeing increasing numbers. And so I expect this to translate and travel across the world, especially through some of the more densely populated areas. And I don't think it's going to be good. I think this could see a little bit of an effect on the economy and the stock market, so it's something that you should be prepared for. Now, when it comes to earnings next week, we only have two major companies reporting, and that is FuelCell Energy Inc. and Cal-Maine Foods. Neither of them are too exciting, and FuelCell Energy is actually down pretty significantly, so we're not going to touch on these guys too much. What I want to focus on here is my thoughts on the market. And so as of right now, the markets are trading sideways. That's sort of what I would call it. Is we're in a bit of a choppy period right now. We've seen a bit of a pullback on all of our indices, and they're going okay, but we do have some cause for concern, like rising inflation right now and like the Omicron numbers. So those are two things of major concern. And for me, with everything going on right now around Christmas and New Year's and Boxing Day and all of this shopping, I expect Omicron numbers to increase after Christmas because of Christmas. And so that is a concern that I have, is that if Omicron numbers absolutely skyrocket and we see shutdowns come back into place, well, number one, that's not good for the economy. Number two, that could mean more printing money, which is not going to be good for inflation. And so it feels like things could kind of compound on each other. That's what I'm going to be worried about, and that's what I'm going to be watching for. And I think that rising COVID numbers could have a negative impact on labor in certain industries. So for instance, I know a couple of companies that haven't been able to operate regularly because their employees are getting COVID, not because of restrictions or anything else, but because the employees that they have trained and put money into are no longer able to do the job because they have to take 2 weeks off because of COVID. And one of the hardest hit industries because of this is actually airlines. We've seen several major airlines cancel flights over the last few days just because they don't have enough staff, because they're all infected with Omicron. And so this can be bad for the business because of the restrictions. It can also be bad for the business because of the labor shortage, and it can also be bad for us because if Omicron gets worse and more money gets printed to basically combat that and help people, that's going to cause inflation to get worse, which is also going to be a bigger problem. Now, let's say that that doesn't happen and that we have money that we want to invest into the market because we feel confident and that the markets continue to go in the upwards direction like we saw last week. Well, that's when I would be buying stocks, and the stocks that are at the top of my watch list to buy into are right here. So number one here is Coursera. This is a company that I like, that I've bought into twice and I've been stopped out on twice, and I don't feel bad about it. I have no hesitation about it, and I have no hard feelings about it, because that just means that I now have an opportunity to buy back in at a lower price, save myself some money, and pick up a couple extra shares. And it is possible that that is about to be what's happening with Coursera. The reason I say that is because we fell through support here, right here at $30. That's when I got stopped out. And now the shares traded as low as $22.80, currently trading at about $25. And the company has a price to sales ratio of 8x, with 33% growth quarter over quarter, which for me, that falls into the criteria that I'm looking for a growth stock. I think it is significantly undervalued at this level. I like the company, I like the industry, I like the business, I like everything about this stock, and it continues to get cheaper and cheaper and cheaper. So I have no problem buying it again, and if I get stopped out again, it doesn't matter, because it means that I'm going to have another opportunity to buy in even cheaper if I'm just patient. And so as of right now, Coursera is one of the stocks at the top of my list. Next stock that is also at the top of my list here is Adobe. I absolutely love Adobe as a business model and as a company. Their CEO is absolutely fantastic, and as you can see, the stock has dipped down to previous support here, right around 500, 560 right here, and now we are starting to bounce back upwards. And so if we see the NASDAQ and the NASDAQ 100 going in the bullish direction come Monday, Tuesday, this could be a great opportunity to get into Adobe, which is a great company. You can hold it long term, and I have no doubts that you'll do well on it. Next company here is Tesla. I actually pointed this one out on last week's watch list because I said, hey, we're coming down to support right at 900 here. This was previous resistance back at the beginning of the year. Tesla ran up to 900 and got rejected. We broke through 900 and we came back down and we tested 900 last week. I pointed this out on the watch list, and if you had got into it, you would have made a nice easy 20% on the way up just in the last like 4 or 5 days here. I promise you, Tesla likes to play around these round numbers, especially if they have previous resistance and support there. If it's 7, 8, 900, 1,000, 1,100, 1,200, those are key levels for Tesla. It moves around those $100 marks, and it's something that you need to be well aware of because they are very important and they're easy to prick off. So if you look at this one, it was literally just previous resistance from before, price line all the way across right at 900, and as you can see, we tested 900 for 2 days and we bounced up, now trading at 1,067. So you would have done extremely well. Now the next company I want to talk about here is Block. This company used to be called Square. The ticker symbol is SQ. Company ran into some major resistance right here around 280, and they are now trading down at 160. The reason I like this company is because they have a great business model. It's almost recurring revenue, and they now have a full-time CEO in Jack Dorsey, and the stock is also trading at the same price it was trading at in like October of 2020. So it's basically trading about a year's back, and the company has only gotten better. So I really, really like Square, never mind, Block now. That's a weird transition from Square to Block. But I like the company. I think they're doing really well, and I think we should expect some support in here between 150 and 160. Next company is Li-Cycle. I sold out of this company right here around $11 or $12. It's now trading back down at $10.05. This was a SPAC company that takes in used lithium ion and scrap lithium ion parts, breaks it down and sells them as raw materials back to the lithium ion battery manufacturers, and that means that they're making money on both sides of the transaction. It's absolutely amazing. It's a great business model. It's a long-term business model, but as of right now, I think it's a great company to swing trade and long-term invest in. Now, the last company I want to point out to you here is Palo Alto Networks. This is a cybersecurity company that is growing exponentially fast. Their revenue is amazing. The company is phenomenal, and this is an industry that I think is only going to grow in the future. And the stock is testing previous resistance set in November here. It looks like on Friday it set brand new highs right here, and I think we're going to see this stock continue to run into the new year because cybersecurity is only going to become more important over the next few years. Now, here is my summary for the video. Number one, end of the year trading. That is the phase that we are in right now. So you need to understand that volume is going to be a little bit lower, and the Omicron variant is likely going to be a focus because I think Christmas is going to cause these cases to absolutely skyrocket. So you need to make sure that you're trading in the direction of the market. If things are crashing on day one and day two of the market open here, I'm not going to be buying these stocks because all of these stocks are going to be falling if the market crashes. But if we see confidence in the market, we see money coming into the market, and we see our indexes moving in the bullish direction, in the upwards direction, that is what will give me confidence to make the trades and get into the companies that I just highlighted for you today. Now, if you're interested in learning a little bit more about how to analyze these stocks, look at these companies, and make your own watch list, then definitely check out my completely free course called Stock Market Fundamentals. It is hosted on Skillshare. There's over 10,000 students that have gone through the course. There's over 340 reviews for you to take a read through, and there's over 1.5 million minutes of watch time, so I promise you it'll be the best free resource that you can find, and the link is down in the description below. If you get any value out of this video, remember to click that like and subscribe button, and I'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.